In this video, I want to build upon what I was discussing in the last video that I published and sent up onto YouTube, which I did on a Sunday night on the 17th, which covered the market action up until about the 15th, which is this arrow right in here. And what I was talking about was a potential top developing in here. What I was measuring during the course of several trading sessions was an increase in open interest on the puts and a decrease of open interest on the calls. I was also seeing a very similar type of behavior with the futures contracts. So this is the video that I'm speaking of, and at the end of this video I'm going to provide a link that will enable you to view this video, and you can see what I was talking about in here about the potential of a resistance of a top formation in here, this being a head, this being the left shoulder, and perhaps the right shoulder being developed in here. Early Monday morning, we got somewhat of a confirmation that this might be somewhat of a top. This is where we were heading into FOMC, and so this is a time where we oftentimes go into a range until the announcement is made, and so it's a great opportunity to participate on a range-bound type of market once you have areas of resistance and support established, which we measure. They're largely Fibonacci, and they're a part of the daily video and chart, which is exactly this chart that you see here right now that I send out to my subscribers every morning. And so as we proceeded and came down into support, I established some long call positions with the idea that if we just got a little bit of a reaction, I could buy puts and establish a strangle. And that's what my objective was in here. Since we were able to buy a little bit low in here with the calls, come up a little bit into the range and establish the puts, I locked in a little bit of a profit in here to finance the risk of this long strangle. And so we start to go sideways from here. And as we do that, and we got a little bit of a bop down here, I was able to take off these puts, and I actually established more long calls in here. The profits from this push to the downside enabled me to participate with this reversal at support with calls. So I'm long basically two contract sets down here at the support area, but it's because I had this run down with the puts. If it happened in the opposite way, I would have the same opportunity, and that's what's so nice about participating with the options. You can leg in and design your risk based upon the support and resistance zones that we define. If it gets blown out in one direction or another, we're still going to make a profit in here off the other side. But let's continue in here. As we come up, we take those calls off. We establish some puts. Again, we establish this put position with the profits that we made from this call coming up into the area. Now, this market can trade anywhere in here, and it doesn't matter. With a futures contract, it'll probably scare you out of it. It'll probably scare me out of it. But with an option, I can handle that. I can handle any price action, and I can expect it. And by participating with the options, it actually takes away the demand of being so precise. Now, these trades were actually pretty good in that they, were working off reversal bar patterns, which happened to be the top. But, our success does not demand that we specifically hit this bar the way that we did here. It could trade anywhere in here. So it takes out that demand for being exact because it's so difficult to do. So we established the puts. We came back down here to the support, did the same thing. Took the puts off. I used the profits from that to establish calls again and rode it up to the high end of the range. And so you can see that we just kept doing that back and forth, and we're really able to create for ourselves a great opportunity to trade this range with positions that were financed by the market. That's the key to it. So here's the link to that video so you can go back and see what I was discussing about this high being a potential top and how we could participate. And this is our website. OEXoptionstrading.com. We cover both the OEX and the S&P 500. I love the XPX because there's more amplitude in the moves. The moves are pretty similar, but there's tremendous opportunity in the SPX. Trading them the same way, I cover both. And so what we do each morning as a subscriber, I send out a video that covers both the OEX and the S&P 500 marked up the same way. And I also indicate where the support areas are, where the resistance areas are for the day. And then as the day unfolds in real time, I look for these areas to become basically our conditions to be met to take an action. And then that's when I send out the real-time alerts using the Yahoo Messenger. And this is a way in which you can place these trades. I prefer that you do them in simulation so that you can really see how it can affect an account. And so the idea is not for you too much to try to duplicate what I do, but learn the systematic way in which you can use these options, both the puts and the calls on the weeklies as well as the monthlies. Not doing so much here in the monthlies because I don't have a trend in one direction or another. I have this weekly, very short-term range in here. So we've been participating with the weekly options, which is great news for the smaller accounts because there's less of a capital demand. But at the beginning of the day, you receive that chart as well as the real-time alerts throughout the day. To subscribe to us, very easy. The subscribe button will take you down to where you can hit this Buy Now button. It'll take you to a Google checkout. I've tried to make it real economical and real easy. It's a month-to-month relationship. You can renew each month if you like. And so this is a way, if you really would like to learn a way in which you can participate safely in these markets. I've always said, as much as I love to trade the futures, if it hadn't have been for the options, I'd have been gone a long time ago. It just enables you to tailor the amount of risk that you want to take. And we discuss that. We choose our deltas in such a way that we can participate at a level that we're comfortable with. And the great thing about the options is that as they move in your favor, the rate in which they improve increases. And as they move out of your favor, the rate in which they move against you reduces. So it's a wonderful way to hedge off a lot of the risk. Now, on the other side of that, you have time decay. And with options, time is a factor. But if your timing is good, your profit targets are realistic, and you're pretty quick with the execution, and you see most of these trades unfold in about a day and a half. That's a great way to offset the disadvantage of theta, that is time decay, and make a consistent profit, largely by being on both sides, but as long as you participate within this range.